What are the best loans for a real estate investor? That is what we are talking about today. What's going on, my friend? Welcome back to the channel here. My wife and I, Andrea and Stephan, own 258 units of rental property or real estate. And today we are talking about loans because, as you may or may not know, financing and debt is what can really make a deal, no deal, a good deal, kind of a good deal, not really a good deal. Today we have Linda here. Linda from PLB Lending.
PLB Lending.
Yes, Linda is our in-house lender here at the Stephan Group Real Estate Brokerage. We're in our HQ right now. Linda, you're going to share some light on what are the best loans for real estate investors. You've helped me tremendously in my career. You did the loan on our primary home, which is always good. Did a lot of my loans early on as a real estate investor. So I'm going to go through a couple loan scenarios here, and I just need you to teach our audience. A lot of our audience is newer real estate investors, husband-wife duo, right? You work obviously with a lot, Andrea, with a lot of new investors. Would you say one of their common questions is about financing and debt?
Yeah, absolutely. That's, the first question that they ask. They come to us and say, like, especially in an investment, what's the cash flow going to be? How much am I going to have to put down? Those are the first two questions that we get asked.
Obviously, Andrea and I can talk about this, but we figured why not better just to bring in an actual expert who is here in-house with us. So let's get started with it. So conventional loans, this is like your typical, like what I did essentially early on, right? Because when I was investing in 1 to 4 units, there was no DSCR loan. It was all just conventional.
Correct.
So if I'm just watching this, maybe I don't own any rental properties right now. I want to do a conventional long-term rental property loan. What does that look like?
Well, what it looks like is, first of all, Fannie Mae, Freddie Mac will give you 10 mortgages.
Including your personal.
Including your personal. So that's huge. You can qualify up to 10 mortgages. Super easy to qualify. If you can qualify for what you currently have, as far as your current mortgage, car payment, anything like that, the rental property will help you qualify for the rental property. So single family, you're looking at 20% down. Multifamily, up to 4 units. Fannie Mae will finance 25% down.
Which is really not bad, because right now with commercial multifamily, which is what we do, I would say minimum's like 30% down. Gone are the days of 20%. What does it take to do that? So if I want to do like a conventional loan, W-2, tax returns, like what
it takes that, but the client just needs to be able to cover their current debt that they have. The property will cover the payment on the property. Right. And what I mean by that is the appraiser is going to go out, they're going to provide a comparable rent schedule. In the appraisal, give us 3 comparables for rent and tell us what the market rent of that property is.
I remember when I was doing this, because this is like all I knew back then. I thought multifamily was like just like this esoteric thing and like couldn't really get to it. I remembered every rental property I got, they started like, it almost got harder to get that next one. Then they looked at that and like debt to income ratio, like how does all that play into it? And then once I got to 10, you were able to give me a portfolio loan, which we'll talk about in a bit here. How does that work? Is it like the more you get, the more strict they become? How does that work?
Well, debt to income still applies.
Yeah.
Okay, so the buyer still has to be able to qualify for what they currently have. Now, there's ways to get around if they're really taking losses on tax returns on properties, okay? We can always order just a comparable rent schedule on their property, and then if they provide us the current lease with receipt of the last 2 months payment, we can use current rent versus their Schedule E, which is huge.
Do they have to own the property for a certain amount of time?
Well, no, at least a year. It has to show up on the tax return. So this is somebody, maybe they're on their, 5th, 6th, 7th, or 8th rental property, and it's getting a little tougher to qualify. There's ways that we can work out the debt ratio.
Okay, so who would you say a conventional loan, like you said, Freddie, Fannie, so it's government-backed, 30-year AM, right? 30-year fixed, which is nice, like coming into it, you're like, I know this is what my payment's gonna be for the term of the loan. Who is this for?
Anyone could qualify for this kind of loan. You can even put a co-signer on a conventional mortgage.
So maybe if I'm like younger or newer trying to get into this, mom and dad are more well off, they would co-sign and get me into my first property.
Correct. Or if it's your first property and you're gonna, let's say it's a multifamily, then you're gonna house hack it, live in one of the units. Then you're gonna go down to like a 3.5% to a 5% down.
Who would you say maybe this isn't for?
The person it isn't for is someone with a cash business, but we have other loans.
Because it's hard for them to prove income. Where we've seen too with clients in the past, they're like, hey, I make all this money, but then they write everything off. My first business, the telehealth business, the goal was every year to write everything off you can, right? Reduce that taxable income as much as possible. But the more and more we got into owning properties now with 258 units, there's like a balance. You obviously want to write things off, But you have to show profit if you own a business, or else you can't finance anything.
Well, yes and no.
Correct me.
I always ask for the tax return, of course.
Yeah.
See if we can get the client to qualify with the tax return, because depreciation, depletion, a lot of things can be added back to income. If that doesn't work, again, there's other loans.
Is there drawbacks to it?
No.
It goes on your credit report, though, right?
It does. It goes
Right.
on your credit report. It's a personal loan,
Right.
so, or a mortgage.
Once you hit the 10, you're just done with
Correct.
Freddie Fannie. Low risk too, right? Government loans.
Right.
Have you ever seen one of those loans called in? I mean, like the lender's like, we got to go pull this back.
No, they don't call them in. Of course, people default,
Mhm.
but no, the lender doesn't call it.
You've never seen a lender call
No.
a conventional loan?
No.
Wow.
I've never seen that.
In how many years?
In 25 years, I've never seen that.
So there's safety
Yeah.
with that. Are there due on demand clauses in those
There's-
conventional loans?
Well, only if you sell. That's in every mortgage.
Got it, got
if,
it, got
if,
it.
If you sell,
Got
of
it.
course, the loan's got to be paid off.
Got it.
Yeah.
See, all of our commercial loans have what's called due on demand. So if the lender says, we're calling the loan in, you have to pay the full amount. Now, obviously, if there was like no cause for that, or like the bank got sold out, you go to court and you go to battle. You know what I mean? Like, hey, I did nothing wrong here. But that's like what you've always preached. Start small, start
Right.
simple, very simple process.
It is. It's a
Yeah.
very simple process.
And pretty darn risk adverse. No due on demand clause. The loan can't get called in. Low risk, high reward though, right? Because there's always risk when you buy a rental property. But as far as like loan products go, it's probably the lowest risk out there.
It
correct?
is.
Okay. Good to share this with someone who's maybe very risk adverse and not afraid to put it on their personal credit report. Let's talk about DSCR loans, because these are the new ones. These are the hot ones that everyone talks about. So when I was buying rental properties way back in my day, 2020, 2021, there was no DSCR loans. When did these come about?
These came about, I believe, 21.
What is a DSCR loan?
It's a
Give it to me,
really,
Linda.
really simple loan. So DSCR,
Yep.
debt service coverage ratio. So what that simply means is, will the rent support the payment?
Got it.
Okay. And there's all different lenders that do these loans. We can do these loans down to $75,000 up into the millions. We can do a DSCR on anywhere from a single family to 10 units.
Wow.
And typically 25% down. We can do a credit score as low as a 640. Okay. Yeah. I mean, great deal. Yeah. It's really credit report and assets. That's it. That's all that's on the application.
No tax return.
No tax return, no employment history on the application, nothing. If the appraiser tells us what the rent is, to get that comparable rent schedule, we're going to get the same thing as a conventional loan. If that supports the mortgage payment, the loan's approved.
Wow.
So it's just on what the appraiser's saying the rent's gonna be, not what the current rent is?
Well, we'll go off of either or, but if it's a property that's been rented for a while and let's say rents are under market, we prefer to go with what the appraiser tells us.
Okay.
Got it.
Yeah.
Love that. No income verification.
No income verification. The application is pretty blank. We're gonna complete the assets and that's it.
That is wild.
It is.
How many DSCR loans can you have?
Each lender has their limit on how many they'll give
Okay.
a borrower, but really it's unlimited because most lenders will give 4 to 10 per borrower.
This would have been way different.
Right,
Does this go on your credit report?
It does.
Okay, so
It does.
You close in your personal name or an
Yes.
LLC.
You can do either, but
Okay.
the credit is still personally connected.
Got it.
Yeah.
So that's a good point though, because people are like, no, I'm going to go close in an LLC. It's still going on your credit report.
Right, but
Got
Tony, it's a 30-year AM, no prepayment penalty. It has the same benefits as a conventional mortgage.
Prepayment penalty means like if I refinance the loan with a different lender, I am paying a penalty to do so. Sometimes even if I sell the loan too soon,
Right.
paying a penalty. We paid on our St. Clair Shores refinance.
Right.
Remember? 16 units, we refinanced it with a different, it was a commercial loan, refinanced it with a different lender. 40,000, Linda.
That's crazy.
Yeah, because they wouldn't do the refinance. So we walked away with almost 300,000 in equity. I had to pay 40 grand to get that equity out. So no covenants, no issues with that.
None. Once you close, you're closed.
No W-2. That's mind-boggling.
It is.
I was gonna ask about owning assets. Do they have to own them for a certain amount of time before they apply for a DSCR loan?
They have to at least have a housing history to
Okay.
get a DSCR
Yeah,
loan.
tell us about that, because that is one caveat.
It is.
Yeah.
It is. The buyer has to own a piece of real estate and they have to have a loan against it. They have to be able to show that they can manage a house payment.
Even if it's a personal home.
Correct. Even if it's primary.
Okay.
So do they
Yeah.
want to see that history for a certain amount of time?
12 months.
12 months.
12
okay.
months.
What an interesting kind of like covenant there. You know, like, hey,
Yeah.
you have to own something and have a payment history, but you don't have to have a job.
Correct. Yeah, it's kind of
It's
crazy.
kinda weird,
Yeah,
yeah.
it's crazy. I agree.
If I'm a newer investor, DSCR seems like the way to go,
It is.
right? Had we known about this, we definitely would have done DSCR.
Right.
100%. You said this is for 1 to 10 units.
Correct.
And this is what you do majority for our clients is DSCR
It is.
loans. So it sounds like you can scale without restrictions because there's no limit on this.
Correct.
Have you seen a DSCR loan not get approved? And if so, why?
No, I have not. Because it can be worked out. I mean, I pivot easily.
No, you do. We've never sent you someone you haven't closed on.
Right.
That's really rare to say for a lender.
Yeah, I think it's collecting all that data up front.
Right.
That's one thing that you've done with all of our clients.
No surprises.
People don't understand mortgage people are salespeople. You're 100% commission like we are. There's nothing wrong with that. In our experience, they will promise a unicorn and then deliver a donkey.
I'm only known by agents by the last deal. You know what I mean?
Love that.
And track history is everything. Not only with the salespeople, real estate people, financial planners, everywhere I get my referrals from, but it's also track record so important with my underwriters. Like I have established relationships with my underwriters. They know what kind of business I write. So it's easier to make those phone calls if something does come up, hey, let's work this out, or how can we work this out? Let's go to plan B. And so gathering everything to begin with is just super important.
Where we really want people to understand, because sometimes people get a little like, oh, wow, she's asking for a lot. Well, she's doing that, though, to make sure what she tells you is accurate.
Right.
Versus the ones who don't ask for anything. Oh, we can do that. We can do that.
Right.
You have to be kind of wary of, right?
Well, and I've found in my own experience, and I'm sure that you know, like you don't want to be called every third day asking for another document.
Right.
You know what I mean?
Right.
Just send it all up front at once. And then, hey, if I need one update before we close, that's easy. So DSCR, you can also do a foreign national. So you can do a loan for someone who's not a U.S. citizen and has no credit report. We've closed one.
Yeah.
A foreign national can purchase up to 10 units on a DSCR loan.
crazy.
Yeah.
It's an amazing product. It
It
really
is an amazing product. They just have to own a primary residence.
You just touch on too with like the closing, if they need to be here or can they close where they're at.
They have to come here to close, or they have to go to their own country's embassy to close.
So that's just like an important tidbit there.
Yes.
With closing and scheduling your closings and things like that.
FHA and VA loan.
Yes.
Especially like for house hacking.
Yes.
So like, it's like, what is this? Because this is the 3.5% to 5%.
Right.
I don't even understand why is some 3.5, why is some 5. What is FHA? What is VA?
Okay,
Who's this for?
so let's start with FHA. FHA is, such loose guidelines.
Okay.
3.5% down. Doesn't even have to be the borrower's own money. Can be gift money. I even have down payment assistance money to cover the 3.5%, which is a second mortgage. We can give you a first mortgage for 96.5%, a second mortgage for 3.5%. You can come to the table with no down payment. You can buy up to 4 units. You got to occupy one of them for 12 months. You can purchase 4 units is up over $1 million for an FHA loan limits.
So I can buy $1 million property for
4 units.
Yep.
If you're going to occupy one, 3.5% down.
Which ends up being what's the number?
And $1 million.
Yeah.
3.5%. What's that? 35.
So I can own $1 million asset for $35,000.
What's even better is we can take the rental income on the other 3 units to help you qualify.
So you can essentially live for free and even cash flow.
Oh, yeah.
While they're paying down your mortgage.
Right.
So who would you say this is for?
Really for anybody. It's for anyone who doesn't own a property now. This is a great way to get into your first home. It's even can be used for, I have an experienced investor who used an FHA to move into a 2-family. But he was very calculated. He buys a property, lives in it 3 years, buys the next one 3 years, 3 years, 3 years. And then he came across a duplex, was 3.5% down.
So you can build a pretty darn good portfolio just doing this, as long as you're fluid and flexible. I think this is great for younger investors.
Great things though about FHA is anyone who's experienced like a life event, like they'll take somebody a bankruptcy after 2 years, if you've had a foreclosure after 3 years.
What does FHA stand for?
Federal Housing Authority. It's a loan where it's insured through the government. Typically it's first-time home buyers, but it doesn't have to be.
So how many FHA loans can you have?
You can only have one at a time.
But let's say if I do that every year I move out, how many total can I have?
You would have to refinance that house to a conventional to use FHA again.
Got it.
There's only a couple exceptions where you can have two at the same time. It's got to be a case of divorce or relocation.
If I have an FHA home right now, I lived there for a year and I want to turn it into a rental. I move out, I refinance it to a conventional. If there's gains, can I pull the gains out?
Sure. You can do a cash out refi and then do an FHA on your move up house.
So now my new home, maybe a little bit nicer, better, because I was fiscally smart. I listen to the channel. I don't blow all my money. I get another FHA loan and I can just rinse and repeat.
So VA for veterans, of course, they can purchase zero down. They can purchase a 4-unit, zero down. If they own a primary now, they can cash it out to 100% of appraisal. What that means is, let's say you bought your house, prior to 2020, your equity's up over 50% right now. Let's say you bought it for $300, now it's worth $600. I can cash you out and you can come to closing and get a check for $300,000.
It's a lot easier than I realized for people to own rental property real estate. There's just tools out there. If you guys don't get in this game, you're either not working with the right professionals, you're not educated, or you're just not doing stuff. There's really no reason you can't get into this game. To read into the last point, which is a HELOC, home equity line of credit.
Yes.
I know of people, and even when I was kind of getting started, I looked at a HELOC. We never did a HELOC. There are people who have a primary, have enough equity on their primary, and you can explain what a HELOC means, but it's like a credit card, right? They put a rental property on the HELOC, somehow pay it off, and just use that over and over again. So what's the HELOC? How do I get it? Who's it for?
HELOC is just a home equity line of credit. It's against your primary residence. Okay, you can take out up to 90% of the appraisal, which is nice.
Yeah.
And it's just, you can pay interest only on it for the first 10 years, which is a great deal. And you can use a HELOC to either put down payment on an investment property or to just pay cash for an investment property.
What's the qualification to get a HELOC? So if I'm listening to this, I'm like, oh, I've got equity on my home.
Debt ratio 50%. They'll go to a DTI of 50% on a home equity line. What that means is, let's say you're making $10,000 a month. We can take your total debt up to $5,000 per month. What it means is it's super easy to qualify for.
What were the negatives of a HELOC? Goes on your personal credit.
It goes on your
right?
personal credit.
What if I miss a HELOC payment?
Just like missing a mortgage payment, it's going to hit your credit score pretty hard.
Really? One miss?
One miss, 130-day late.
With that being said, so all right, HELOC, just like a mortgage, okay? Do I have to use the HELOC for a rental property?
No, you don't have to.
So I could go literally HELOC my home, get $200,000 and go blow it in Vegas this weekend. No one's asking questions.
No
Really?
questions asked.
Would you say is it hard to qualify for a HELOC, or it's just debt to income ratio?
It's just debt to income ratio.
Okay.
It's easy, no appraisal, it's easy.
No appraisal?
No, we do an AVM, which is just an automated value.
If my home mortgages with someone else, can you do the HELOC for
Yes.
it? Or do you have to go to the lender who
No,
did it?
we can do a HELOC for anyone.
Would you say a HELOC's more risky to use? Is it fixed rate? Is it variable rate?
It's variable rate. It's going to be based on prime, either prime 0, prime up to 2.5.
Out of all the products we talked about here, this is the only variable rate.
Correct.
Okay. So this would you say like last case scenario, or what do you think to use a HELOC to purchase like a rental property?
I mean, a lot of people use their HELOC for the initial down payment to get started on rental properties.
Got it. So my rate just might change. Is there a cap to how high the rate can go?
There is.
Do you have to pay for that cap, or is that just included?
No, it's included.
Is there anyone you'd say don't use a HELOC?
No.
Okay. If I'm a real estate investor, we just talked about 4 different products. What would your go-to product be and why?
It's just everyone's different. Like, honestly, it just depends on the situation.
What would you say your favorite is?
I mean, DSCR loans are easy, conventional loans easy. I mean, I'm always up for a challenge though. I really am.
Hey guys, if this has been valuable, let us know, drop in the comment section. If you have specific questions, let us know, drop in the comment section as always. If you want to see us go more in depth on any of these products, especially the DSCR loan, I'm thinking we should do an episode on that. That would be huge. Thank you so much for Linda being here. So Linda, again, where should they go?
They should call me, 248-931-9600.
And they can be out of state, out of country, doesn't matter.
Yes.
They don't have to be local to Michigan.
Yes.
They want to learn more about the Stephan Group, where should they go?
So they go to stephangrouprealestate.com.
And guys, as always, be sure to comment, like, subscribe on the channel, leave us a review wherever you're listening to this at. If you want some of the free resources we have, click the links in the descriptions. We have tons of free resources to help you guys get started. And if you're looking for one-on-one mentorship and coaching and guidance and all this with how to get into your first multifamily property, work with myself, and not just myself, but our entire team here. As you see, it's a team collaborative effort on helping our clients get into the best properties with the best financing, with the best due diligence, and the best team out there. Click the link in the description. Until next time, we'll talk soon. Thanks.